Hello and welcome to this special interaction coming to you from the Reserve Bank of India headquarters. This week, the RBI, in its judgment, has decided to reduce the cash reserve ratio marginally by 25 basis points, but it hasn't touched its policy rate, the repo rate, which has been left unchanged at 8%. As always, with RBI decisions, there are enough bouquets and brickbats being thrown at the central bank. But to help us understand the analytics behind it, the governor himself, Dr. D Subbarao. Dr. Subbarao, thank you so much for joining us.
Thank you, Ida. I appreciate this opportunity of being an NDTV prophet.
Thanks. So I started by saying that you got, bouquets and brickbats, as is the case with
That's
many
part
RBI.
of the game.
That is part of the game for the central bank, indeed. Sir, there is still a bit of understanding to be, held on what went behind that decision. You've said you look at both inflation and growth, yet you moved on CRR, which is a monetary tool, but not moved on repo, which is, the policy benchmark rate. I still want to get a slightly detailed explanation into what went behind that.
Thank you, Ira. You must allow me a more nuanced response. First, I want to set the context. If you look at inflation, it had been around 7.5% for much of this fiscal year, but it trended up in September. That's not entirely due to adjustment of diesel and electricity prices. That contributed, of course, but the momentum was still firm. If you look at a CPI inflation, that too had trended up, has been just short of double digits. So we have to take cognizance of this. On the other hand, growth has moderated. It was 9.2% in the fourth quarter of year before last. It had gone down to 5.3% in the fourth quarter of last year. In the first quarter of this year, it has improved marginally to 5.5%. So we had to balance this growth inflation dynamic, which has always been a challenge, but particularly a complex challenge this time round. We wanted to keep the repo rate where it was to signal our anti-inflation stance. You note that the repo rate is currently at 8.8% and inflation is at 7.8%. So it's slightly marginally real positive. But as inflation goes up, it might turn negative once again. On the other hand, we had to respond to growth moderation as well. So while keeping the repo rate where it was, to signal the anti-inflationary stance, we wanted to maintain comfortable liquidity so that interest rates do not go up beyond necessary to keep the flow of credit growing to productive sectors of the economy and to ease the supply constraints. I also want to respond to another issue that people raise, which is about the growth inflation trade-off. It's not as simplistic as people tend to make it. Growth is important, but low and stable inflation is also important. And in the Reserve Bank, we believe that low and stable inflation will provide an environment for investors and consumers to make informed decisions. So we need to bring inflation down below a threshold level in order to improve growth. So low inflation is indeed supportive of growth. It's not that we must see a trade-off between growth and inflation.
Governor, a couple of follow-up questions. One on the issue of the policy rate. I completely understand your rationale on the policy rates, real rates in particular. But then CRR is been, at least in the past, the RBI has always maintained it's a monetary instrument and not just a liquidity instrument. Are you using it right now as more of a liquidity instrument? And if liquidity was the only concern, then open market operations were available to you, sir?
Well, we've always maintained that there are two monetary policy tools, the repo rate and the CRR. The CRR is a monetary policy instrument with liquidity dimensions because it changes the volume of money. So our intention was to improve liquidity so that transmission takes place. Of course, there's the option of OMO, but in our perception, in our assessment, the constraints on liquidity are going to persist for a few more months. So some systemic action was required rather than OMOs. OMOs is always an option, but I'm unable to say at this point in time whether we might do OMOs or not. But the context required that we take action at a systemic level.
Okay, so now let me come to the inflation side. So if one variable is the level of inflation that we are seeing right now and the policy rates, so real rates is still an issue that the RBI is working on, then it's difficult to understand how you would get room to adjust in the next 3 to 6 months, because you've given a guidance that it is possible that further policy easing will happen in Q4. If inflation stays around 7.5%, how are you going to get that room? One is assuming that that room would be on the repo side, which may be a false assumption
Yes.
on my part.
No, not at all. It's not a false assumption at all. Our assessment was based on a trajectory of growth and inflation. Inflation is at 7.8%. For the full year, we said it'll be 7.5%. Our trajectory shows that it'll go up over the next few months before trending down in the fourth quarter of this year. Our projection is based not on point estimates, but on trajectory.
Okay.
And given that there are no unanticipated outcomes, unanticipated developments, we believe that this trajectory will play out. And our guidance was informed by this trajectory of inflation. But I must also caution that our guidance is just that, a guidance. It's not an irrevocable commitment. It's conditional on growth and inflation playing out as we expect them to.
India's #1 news app just got even better. Download NDTV's new app. Fully optimized for Retina display. Full screen view. Faster response time. And Sudoku. NDTV's new iPad app. Download now.